JB Knowledge Podcast Network. On episode 62 of the Insurtech Geek Podcast, talking about the future of flood insurance with Jim Albert from Neptune Flood. The Insurtech Geek Podcast, powered by JB Knowledge, is all about technology that's transforming and disrupting the insurance world. We'll be interviewing guests and doing deep dives into specific tech we see changing the industry. We're taking you on a journey through insurance tech, so enjoy the ride and geek out. My goodness. As we record this, it's Friday, July 16th, 2021. We are halfway through 21. It still feels like it's the beginning of 20 because I feel like we had this big reset after, the worst of COVID. And of course, things have reopened pretty much everywhere here in the United States. A lot of other countries are not in the same boat because they've been very slow to get vaccines in arms. Even surprisingly, Canada and Australia having surprisingly low rates of vaccination. So they're enduring some more lockdowns. But here in the United States, everything's about blown wide open. And up here on the shores of Lake Michigan right now, I tell you what, it is back to a full sense of normalcy with everybody from Detroit and Chicago piling in here to the lakefront for the and from South Florida, by the way, of course, escaping the heat and coming up here to the shores of Michigan for a cool summer, and it has been that for sure. With on the show today, I've got my fellow Texigander, that's a Texas Michigan lover there, Rob Galbraith, the most interesting man in insurance. Rob, how are you doing, bud?
I'm doing good. We are having a mild summer so far in Texas. I can't remember the last time I could say that. It's been struggling to make 80, a lot of rain down here, so it's been a little bit unusual, but not complaining.
Nice. Glad to hear that. And with us from one of my favorite places in America, beautiful St. Petersburg, Florida. He is the chairman and co-founder over at Neptune Flood, a fellow James, but he goes by Jim. Jim Albert. Jim, how you doing?
Great, James. Really, really glad to be here, and actually would really enjoy being up in Michigan with you because it'd be a lot cooler than here in St. Pete.
Yeah, I'm a regular in St. Pete. Got a big customer over there that I go visit all the time, and got some prospects I visit on a regular basis. And I was actually just speaking at a conference down there in the beginning of June, and it was hot and humid, which is what happens in South Florida.
Yeah.
Of course, hurricane season. You guys, I feel like you got a pass on that hurricane. Like it could have been really bad, and it wasn't nearly as bad as it could have been.
We got an absolute pass. That was about the worst path that could occur for us. A storm just offshore that pushes everything up the bay, but it moved enough that it actually pulled water out of the bay rather than push it up. So the storm surge was minimal at best. The storm in November of Tropical Storm Eta was actually much worse than this hurricane that came through a couple weeks ago.
Yeah, so congratulations as a flood insurance company. Congratulations on that.
Thank you. Yeah, that's an important miss, I think.
I work in two industries at JB Knowledge. We have 250 people here, and we obsess with insurance and risk management. But we also do a lot of work over on the risk side of construction. And the irony to our world is when there's a big flooding event, the insurers, and I saw a meme on this the other day. Of course, there's a meme for everything, but the insurers have their heads in their hands, and the contractors have a big smile on their face because they're excited to get out and rebuild. And so it's like a two-edged sword, but in this case, you dodged a bullet there, and we're excited for you. We're going to talk with you in just a second. Before we get started, don't forget you can subscribe to the Insurtech Geek podcast if you're watching this on video. Because, of course, we stream this on Facebook and Twitter and put it on Vimeo and LinkedIn. You can text Geek Out, GEEKOUT, Geek Out to 66866. Make sure you never miss an episode. We send you the links to the news articles and the show notes and the interview. So you can never miss it there. Now, back to our special guest, Jim Albert from Neptune Flood. Jim, You are chairman and co-founder there. You got a bachelor's in electrical engineering and math over at a fellow SEC school. I'm a Texas Aggie, and you are a Vandy grad, so Vanderbilt University, one of my favorite places. I love Nashville. You know, beautiful campus over there. Let's just talk about you for a minute. Where were you born and raised, and what led you to be an engineering major at Vandy?
Yeah, I grew up in New Jersey and had this misguided concept that if I went to school in the Northeast, then I would live the rest of my life in the Northeast. And of course, nothing like that ever happened. I've lived everywhere, but I went south to Vanderbilt. Once I realized that I wasn't going to play center field for the New York Yankees, I decided to apply my other interest, which is physics and math and technology, into the engineering world. So yeah, got a double E degree at Vanderbilt, and then promptly went back to the Northeast and spent most of my career there.
Ironically, I mean,
Yeah.
now Vandy has now I am a rabid college baseball fan. I mean, I grew up in Baton Rouge, Louisiana, about a mile from Alex Box Stadium. Grew up there when Skip Bertman was winning 5 national titles in 10 years. You know, I watched just some of the best college baseball ever recorded in college baseball history. And then I went to Texas A&M, got to watch a lot of college baseball there. Did you play for Vandy?
No, I tried to walk on, but they had 4 positions, and I was one of 82 going for those 4 positions.
Yeah,
So
it's tough.
Wasn't going to happen.
in the SEC, it is just tough. My business partner played baseball for the Argentina national baseball team, and then he came up here and he tried to walk on at LSU in '96, and you can imagine that was
Wow.
I mean, it's in the middle of their championship run, right? And he just couldn't squeeze in, even though he's really good. Plays World Cup baseball, and then he ended up going to Nickel State and doing some playing there down in South Louisiana. But I love baseball as well. I realized very early on I was no Oral Hershiser, who was my hero, and it wasn't going to happen. So I tried to make my career in engineering as well. So once you got an engineering degree, you went up to the Northeast. Looks like you worked for AT&T for quite a long time, and then had a few different businesses and jobs after that. What'd you do for, it looks almost 20 years, 18 years over at AT&T?
18 years at AT&T. And actually, when I joined AT&T, it had 1 million employees, and it was the Bell system. It was the last year of the Bell system.
Before they got broken up.
They just announced the breakup. And there's some parallels that maybe we'll talk about later on what's going on in flood insurance. But I went in as a technology guy and stayed on the tech side for 7 or 8 years, worked in Bell Labs a little bit. Then, as AT&T does, moved into sales, moved into operations, moved into different roles. Ultimately left in 2000 and joined an IT consulting firm pretty much right at the end of the dot-com bubble. Maybe not the best time to join a consulting firm, but this is one that survived, and ultimately ran the company and then ran their international division over in the UK for a few years as well. It was a long, slow, torturous path to get to the insurance industry. I never imagined I'd go into insurance. But in 2012, I moved back to the States and joined an insurance company here in St. Petersburg as their chief information officer.
Awesome. And what did you learn? What was the path into founding a flood insurance company? I mean, what made you want to go into insurance, and what really drove you into a tech-enabled insurance company?
Yeah, it's always the people, right? You follow people here and there, and I joined the insurance company because of a person that I admired and respected that asked me to be the CIO. But what I found, and this is not going to be any revelation to either of you, but what I found was that the industry was handcuffed by legacy systems and significantly heavily regulated, and there was a lot of the cultural, this is the way it's always been done. And having not been in the industry, but having been heavily involved in e-commerce and software development and data analytics for the 15 years before that, I thought, why can't we just try this out in the insurance industry and see if some of those Amazon-like buying experiences could be applied to a line of insurance? So in 2015, I left, and in later on that year, formed what became Neptune, with a brilliant guy named Bill Martin that I think both of you probably know. He's now the CEO of Plymouth Rock Home Assurance. But he and I founded Neptune together, and it was based on data analytics. And the idea was make it easy to buy flood insurance. Apply that Amazon-like buying experience to flood insurance. Give me an address. I'll give you a quote. Weren't sure we could do it. We thought we could. Thought it'd be interesting to give it a try. And it took about a year and a half to build out the tech. But Bill moved on to Plymouth Rock because it's just a tremendous opportunity for him that was put in front of him. But from 2017 forward, we've now built Neptune into the largest private flood insurer in the U.S. So it worked. A lot of starts and stops, lots of, it's my only startup, James. So I made my share of mistakes, but we kind of fought through that, and it's really turned out to be significantly successful.
Yeah, I mean, starting up from nothing is difficult, and that is an understatement.
Yeah.
I have done it multiple times now. I started Jibby Knowledge out of my dorm room with a $5,000 investment from my father, and
Wow.
and we bootstrapped the rest. I think we took out loans for $68,000 total. It's just really, really difficult to do things on a shoestring and on a bootstrapping. Just as difficult if you have funding, because now you have the pressure of investors and everything behind you. There's all kinds of other challenges that come with that. It is very difficult to get things off the ground, and I have built, run, and sold companies, and then started over again and continue to do it. It is certainly a lifetime experience. One thing I noticed about Neptune was how easy it was and how fast it was to get a quote. So I, of course, as part of this today, I went through and just quoted my house and got a flood quote very quickly. And was able to very easily use your little slider to change my pricing. And,
Good.
I entered the property, it showed up, it didn't tell me, here's been my challenge, Jim, with so many Insurtechs we have on here is I'll go to the website before the interview and I'll enter the address and we don't offer coverage in your area. Right. I mean, so that's one thing I have noticed is there's a lot of very limited coverage among Insurtechs. You cover pretty much darn near everything in the US.
Yeah. And we say yes 95% of the time.
Wow.
Now that won't always be a discount. About 2/3 of the time it's a discount compared to the National Flood Insurance Program. But we know what drives. This was actually one of the lessons from early days in Neptune that we thought we'd just take the finest risks and discount off the NFIP from those risks and say yes 15% of the time. That was a complete non-starter. That was way back in the beta days in 2017 when I was testing out version 1 of our system. And agents don't want to be told no 85% of the time. They want to be confident that they're going to get a yes. And so we made a significant change to our algorithm to make sure that we could accept properties and provide great service, like the 1-minute quote to bind that you experienced earlier today.
Yeah, it was quick. I mean, it was crazy quick. Obviously, I didn't click purchase because I already have flood insurance included as part of my homeowner's policy. I'm one of the lucky ones that was actually included in my homeowners.
Oh, interesting. Yeah.
But you have some really cool things. First off, your coverage. I'm just curious. How did and a lot of others have really struggled to get this level of coverage from a geographic perspective. How did you go about doing it so quickly?
Well, one thing was we stayed surplus lines. So had we gone admitted market, and there were companies that started around the same time that we did that are still only in 7 states or 5 states. By going surplus lines, you can move much faster. The other thing is we iterated all the time. We're on version 135, I think, as of today, of our risk selection and rating engine. We call it Triton. And that's in a little over 3 years. So almost weekly, we push out a new release of our software. If you were in an incumbent carrier, and because you work with some of them, but they might do quarterly software releases.
Yeah.
So 4 a year, and we're doing one a week, sometimes multiple days in a row. So you got to be able to move really, really fast in your system, but then also staying surplus lines and then just communicating very, very well with the state departments of insurance has helped us a lot.
Awesome. Rob, I know you had a great question about just private flood insurance.
Yeah. So, Jim, I know we've had the chance to cross paths several times in the past. So it's great to have you on the podcast. And we've got Nat Cat Geek part kind of in common. But a lot of our listeners probably aren't as versed in flood insurance as you and I, and you certainly are more the expert than I am. But one of the things that's unusual, you've already referenced it, is your primary competition is not necessarily other private insurance companies, but it's actually the federal government through their national flood insurance program. Flood was and has been for decades considered an uninsurable risk because of the adverse selection issues of you don't buy flood insurance unless you live in a flood area. People talk about, 1 in 100-year floods, or you're required to get it, FEMA flood maps, things like that. So maybe you can just, for our listeners, at a very high level, talk a little bit about the National Flood Insurance Program and then how Neptune is different.
Yeah, good question, and it's one I hear a lot because it's confusing. If you buy homeowners insurance, you're almost certainly buying that from a private company. The only time that you might buy it from a government entity is the residual carrier, residual market. It's the insurer of last resort that governments put together, like Florida Citizens, for example, to make sure that people always have at least some option to buy insurance. In flood insurance, it's totally different. And if you think back to 50 years ago when the NFIP was created, flood was almost unmodelable. And I'd say it was unmodelable in a way that would be commercially viable for private companies to underwrite. So as a result, the federal government set up the NFIP, and they did a great job. They set up a program that covered the whole country and brought ultimately up to 5 million people coverage that didn't have it before. But it's a government program. And right now, the NFIP has about 90% market share, but it loses billions every year, and it has very low coverage limits. It's inaccurate in its modeling, and these are their words. It's their flood maps are sometimes as old as 40 years old still, and analog flood maps. So there are lots of things that can be improved upon. So the world changed around 2005, 6, 7, 8, when you had the advances in high-speed computing. You had e-commerce developing rapidly, and people got used to that Amazon one-click buying process. And then you had the availability of data that you could call out and pull in data ultimately via API in real time. What that meant was you could run these data analytics and you could model flood. And companies like CoreLogic and CatRisk and others jumped in, and RMS and AIR have done a good job in creating very sophisticated models for flood. That enabled a private market. And so around 2004 or 5, I think the first private flood insurer popped up. And then when I started Neptune in 2016, there were maybe 3 or 4 or 5. Well, today there are 150 different companies, at least. This is National Association of Insurance Commissioners number, but there are at least 150 different companies that sell private flood insurance in the US, and at least one in every state. So the market's dramatically changed. The other thing is that I think if we go back to the Bell system analogy, I worked in the Bell system. I thought, man, this is an amazing company, amazing talent. Why would you want anything else? Well, once they broke up the Bell system, what happened? You had this explosion of technology, of new companies, of jobs being created, of prices going down, of options for consumers, and all these tangential benefits that happen. The same thing is happening in flood. The NFIP is 90%. It ought to be much smaller. But what's happening with all these little companies coming up, they're using technology in very advanced ways. They're offering new coverage limits. So, for example, with Neptune, you can cover up to you can have $4 million of coverage on your house or your business. With the NFIP, you can only get $250,000. With Neptune, you can get replacement cost, which would be nice because people don't want to replace their 7-year-old couch with another 7-year-old couch. They'd like a new one, please. And then you can also get temporary living expense, cover external buildings, lots of other things. So you see more options, lower prices, better technology, and actually better underwriting results as a result of this competition that's occurred in the market. So the consumer wins. Certainly, there are lots of jobs being created, but also the taxpayer wins because they're not saddled with all this debt from the NFIP that's being picked up by the private markets. But it's early days, Rob. I mean, probably a longer answer than you were looking for, but it's still early days. The fact that the NFIP still has 90% market share says that it's still largely a monopoly.
Does the federal government need to drop out of the flood insurance market, or do they need to substantially pare back their holdings or drive prices up? I mean, now that you have hundreds of competitors and capitalism is doing what capitalism does, right? Innovation, prices, better for consumers, better for you have people making profit, you have consumers saving money. Everybody seems to be winning, but the government's still taking a lot of tax dollars and plowing it into a money-losing program. So, do they still need to exist as a backstop because flood insurance is not available everywhere? Should they slowly wind the program down? I mean, what are your thoughts on that?
Well, I think they should still exist, and I think the long-term solution is this hybrid ecosystem that has lots of private flood carriers. Just think of our example on homeowners. Same thing, where you've got a Florida citizens and a Louisiana citizens and different government carrier of last resort in each state. But those are usually very small entities. It's where you cannot find insurance in the private market, then you always have a backstop from a federal option. Right now, that shouldn't be a 90% market share entity. That should be a 10% market share entity. It's possible that the NFIP should probably shrink, but I really think the bigger issue is actually in flood insurance. If you think homeowners, every homeowner has home insurance. Every driver has car insurance or auto insurance. But in flood insurance, there are only 5.5 million policies. There are 62 million homes in the U.S. at moderate to extreme risk of flooding. That's according to Verisk. So 90% of the market, the difference between 5.5 million and 62 million, have no flood insurance whatsoever. So I actually think the growth in the market should come from the private sector. And that's actually what's happened over the last 5 years. The NFIP has actually shrunk a little bit, but the private market has gone from just a few thousand policies now to, it's a guess, but roughly 500,000 policies.
That's awesome, and the technology that you're deploying, and really the difference maker here has been models and data, right? And private companies having access to those, so they can quote the risk and have some reasonable certainty of what barrel they're staring down. I know, Rob, you had a question about innovations.
Yeah, Jim, you've kind of touched on a lot of things, and really appreciate all the background. I think it's great stuff for our audience. I'm curious specifically, maybe you can touch on, and I'm sure there were many, you talked about 150, you're on your 135th version or something like that, but broadly speaking, what are some of the big innovations that you've made? And you touched on this market challenge in particular. I know in the past, right, there wasn't necessarily a large incentive to sell flood insurance other than if you were required to have it for your mortgage or things like that. It's a product that agents didn't want to have to deal with, right? From the National Flood Insurance Program, it was a long process, laborious. They didn't make much commission, and James just talked a little bit about that Amazon quote flow experience that you've got on your website. I know that a lot of your business also comes from agents, so I don't know if distribution is the biggest challenge you face. Awareness from customers. Obviously, you talked about the underwriting side. Would love to hear a little bit about the claim side. So, where were the biggest innovation points from your perspective for Neptune?
Yeah, I think, Rob, a good way to answer that is to do an analogy. Imagine you go to Amazon. Let's go back to Amazon again. And you look for a product, a piece of clothing, and you find that product and you click buy. And what you get is a screen that pops up that says, thank you for shopping at Amazon. One of our representatives will be back to you within a week or so and tell you if you qualify to buy our product, and we'll tell you how much it costs. Have a nice day. I mean, it feels like a ludicrous analogy, but we know that is pretty much the standard buying process in insurance these days. For many companies, you have to qualify. Some of them will turn you down for insurance. Often that's happened to us in commercial. And then you don't even know what the price is for a while. So the innovation, and the biggest innovation that I believe we came up with, was that's just totally unacceptable. It's unacceptable in every other line of business. In retail, it's totally unacceptable. No one would buy anything on Amazon if that was the experience. So the innovation was, how can we bring that into insurance? And that's what we did. So it's less than a minute, James, as you saw, for quote, bind, sign, and pay. You can do all that in less than a minute. And we demo our product, and when someone says, oh, I'd like to show you a demo of my product, and you think, oh, no, I'm going to lose 45 minutes of my life. Our demos are less than a minute, and they can't believe it. They're amazed that they're done already. So getting behind that, what occurs behind the curtain, there are a few things that were true innovations, I think. One is that API data call. You enter your address, we do an API call out, and we bring back 150 different data elements, and we evaluate within 1 second. We evaluate all those data elements and determine whether we will underwrite that risk or not. So we make that yes/no decision in less than 1 second. So you already see a quote on the screen and you haven't been on our site but longer than 15 seconds. The second thing that actually is pretty significant is real-time aggregation management. What most insurers do is they look backwards quarterly or sometimes even annually and say, well, how many policies did we sell? Did we sell too many in Miami-Dade County? And then they have to manage their volume going forward. We do that in real time. So when you enter the address, James, when you did your quote, we not only evaluated your address for risk, we priced it, but we also evaluated aggregation of all the other policies we have in the area. And then we assign that across multiple buckets of capacity. So many carriers just have one bucket of capacity. We have multiple so that we can sell a lot of policies in Miami-Dade and distribute that across multiple reinsurance capacity buckets. And it's single risk modeling. So those are really four things, Rob, maybe more than you're asking for. But API data call out for 150 data elements, less than 1 minute quote bind, real-time aggregation management, and then single risk modeling, where we're modeling. We know that what house it is, that our geocode is through the roof of the house. We evaluate the elevation at all four corners of the house. So it's very, very accurate. And so the outcome of all that is, it's really easy to use, but the data is so good that it creates great underwriting results. So everybody wins. Reinsurer wins, consumer wins, the agents win because it's super easy. And so we have that alignment across everybody in our system.
So Jim, did you start as an MGA and then move into being a carrier, or what path did you take there?
Yeah, we started as an MGU, really. It's technically MGA, I guess, but MGU because we do the risk selection and the pricing and the billing and the payments and commission payments, everything we do. The only thing we don't do is take a layer of the risk. So in that way, we're an MGU, not a carrier.
And you're still an MGU.
We're still an MGU.
You're still not writing your own paper. So
that's correct. Yeah.
And do you envision yourself moving into being a carrier, or is that the next logical step, or do you really like being an MGU?
You know, we've talked about it and knocked it back and forth a bit. We give away much of the premium by being an MGA. You cede a lot of the premium to the actual carriers. Right now, we've got great relationships with our carriers. I don't know, James. That's something we kind of look at annually and decide: are we of a certain size, and is it materially better for us to be a carrier versus an MGU? Jury's still out.
Yeah. So walk me through the tech that you built yourself versus the stuff that you're licensing. Did you built your own underwriting engine? Did you build your own claim system? I mean, what did you actually author in-house versus licensing? You don't have to mention what products you license, but I'm just curious as to what you decided to build yourself because it was strategic and super important to your business model versus what you licensed in.
Yeah, you'll appreciate this because we built it like a software company. So the idea is automate everything and also try not to be dependent on third parties as we go. So you see some companies that are really just windows to a bunch of other company stuff. Well, we actually wrote pretty much everything. We wrote the front end, so the quoting process and the web interface that you see, that's all developed by us, by our people in-house. We wrote our own agency management system, so our own policy administration system, which is a little unusual.
That's no small feat. That's a big deal, including tracking commissions and payments and everything else, right?
It would have taken us probably 2 years and 10 times as much money. And we got quotes for external providers to come in and do cloud-based policy admin systems. But in the end, we felt like so much of what you do with policy admin systems is take out features that you don't use before you even are able to use the third-party policy admin system. So we just wrote it to be for us from the start. And from 6 months, from first requirements meeting to launch was 6 months of that policy admin system. That's all in-house. We call our risk selection and rating engine Triton, and we've actually trademarked that. We've got a patent filing for our process. And so all that risk selection, the analytics for the risk selection, the pricing model is ours. We don't use Swiss Re's model or Hiscox's model or anybody like that. It is our pricing model. And all the capacity providers that work with us use our model. So we only have one pricing model and one risk selection engine. One thing that's really helpful to have is access to multiple sources of geocodes, because you've got to pull in your geocode data, your public data. Some flood analytics are useful to bring in, which then become part of the mix of how we analyze the risk and do our risk selection. But largely, it's all in-house, James.
Yeah, and that's a huge feat. I've had to build a lot of proprietary policy and claim systems over the last 18, 19 years, and they are monumental feats. And of course, it becomes the core of your business. Actually, there's a really cool visual map you posted about Triton on your website where you can see how many policies are binding and writing in real time. And it's if you want to go and check out it's called the Triton Visualizer at visualizer.neptuneflood.com. You can see how many seconds since the previous quote and where all the quotes are going in the country. And it's like, man, it's a great tool. Certainly that'd be a great tool to send potential investors to because they must love being able to see the activity level, because you really truly have activity going on nationwide.
We were trying to figure out, how do you help people visualize artificial intelligence in action?
Yeah.
And so we created that visualizer. It was Trevor's idea. Trevor Burgess is my primary investor and now the CEO of Neptune, and a brilliant strategic man. But it was his idea to create this visualizer based on Missile Command from the 80s.
Yeah.
So it kind of has that kind of interface. But the problem with it was, we've got this giant monitor on the wall in what we used to be a one-room company, and most of our people were technologists, and they were sitting in a room coding and testing and doing all of that. And we put up this visualizer on the wall, and productivity just fell off the table because everybody would sit there and stare at it for hours. So for people listening to this, you can find it on our website on About Us, and it says, I think it says Triton Visualizer or something like that. But it is really interesting.
That's awesome. Well, I have home insurance through Cincinnati. They bundle flood coverage in with their homeowners policies. And I know that Rob had a question about bundling.
Yeah, Jim, just as we kind of wrap up, I'm curious to where you see the future of flood insurance going, and I guess I would say private flood insurance going. We talked about the size of the market with NFIP. We talked about the size of the uninsured market, which is huge in this case. One idea, and I didn't even know, James, you had this, the bundled home and flood, and that's something I think that's always been kind of a dream, that, it's included in your homeowner's insurance, because then the homeowner isn't trying to play this game of estimating quite inaccurately what their risk of flood is, and thinking that they don't need it, when, quite frankly, I think it's something like 25% of people that live outside a FEMA flood zone actually experience a flood and have a claim. And of course, the vast majority of these people don't have insurance and aren't covered. And so they're very surprised to learn that a flood can cause a ton of damage, even just a little bit amount of water, right? If it gets up to your wall sockets and having to rip out your electrical system, and flood is just an ugly, ugly type of loss. I've seen it firsthand. So, but most people, again, having never experienced it, and because it isn't often, I guess it's not bundled with home and it's not offered. What are your thoughts on that? How do you reach those folks? And do you see it as bundled, or will it always be a separate product?
It's interesting. And there are models all over the world. If you look at how other countries do it, there are actually very few countries where flood and homeowners insurance are bundled as a single product. There's a big reason for that. And it's the same thing in the US. There are a few carriers, James, you have one, but there are a few carriers that they'll either bundle it together or they'll add flood as an endorsement. But what they usually do, those carriers, their flood endorsement product is someone else's flood product. So they might bolt on a Neptune or some other carrier's flood product. And the reason for that is because it's correlated risk. So flood is a very common loss and a catastrophic loss. So when there is a flood claim, as you just said, Rob, it's a big loss. If you correlate that with wind loss, those are two of the most common losses in property and casualty in the US. That's a really significant risk to a carrier to cover both of those. And what we see happening more often is that carriers want to add a flood product, but they'd like to not carry the risk associated with that flood product. So they see benefit to providing the full solution to their policyholders, but they'd like to not carry that risk. So they bolt on a product like Neptune as their flood solution.
You also get into a really interesting dispute resolution issue with your insured, because is it falling water or rising water?
Mhm.
Is it water that was frozen and then melted? I'm just trying to think through all the stuff that happened in the last 20 years. I mean, there's a lot of ways that water can mess up a house. And some of it would be covered by the homeowner's policy and some by the flood policy. So you also have a separation and who's responsible for what issue, and a confused homeowner at the end of the day. Rob, what did you have there?
Oh, you're right. It's Hurricane Katrina, I think, really brought this out to the fore. Where was it the water coming down or the water coming up? There's a lot of lawsuits following that. But every cat event, we talked about the most recent hurricane. It always happens. And you're right, James. Like there's always kind of this disincentive because you want the other one to pay. And yeah, it becomes a huge nightmare from the homeowner's perspective. I think that's why the idea of bundling it makes sense. If that single carrier were to own the whole risk, now you don't have to have different adjusters coming in and trying to determine, right, was it the wind-driven rain? Was it, rising flood waters, things like that? So it is interesting, Jim, but you're right about the risk part of it as well. So it'll be very interesting to see how the future holds. Any other thoughts on kind of the future of flood insurance and growing this market, how you do that?
Well, I think there will be a couple things that happen. I think there will be a broader mandate because climate change is real, flood risk is growing, and there will need to be more flood insurance, not less. And yet having only 10% of the at-risk market covered is a real problem. And it's actually a real problem for government because the government gets leaned on anytime there's an event and people are uninsured. And they're rightfully there for those kind of events. But what they should be able to do is spend their time focusing on healthcare and on infrastructure rebuild. And yet in Hurricane Harvey, for example, they had to spend their time focusing on grants and funding for people that were uninsured. 80% of the people that had losses in Hurricane Harvey were uninsured. So I think there will be a move for a broader mandate of flood insurance, whether that's saying if you're above a certain risk level, you just have to have it. I also think there'll be different ways of buying it. You know how when you buy an airline ticket, you're prompted to, would you like travel insurance with this ticket? And you can't even buy it until you click that box. I see that happening for flood insurance as well. Maybe when you go to Home Depot to buy plywood, or certainly when you buy a house through the real estate industry, you'd be prompted to get flood insurance, not just in the mandatory zones, but overall. Or if you set up a bank account, or maybe even when you buy auto insurance, I can see all these avenues of making it easier to get the flood insurance. And then one other fun one, I think, is visualizations. You guys have probably done the virtual reality or augmented reality with the headsets. But even before that, the visualizations are getting so good that I could see, like, James, if you went online and you didn't think you were at risk of flood insurance, but I was able to show you an image of your house and a realistic scenario of what water would be doing in an event that could commonly occur in your area, that would make it real for you, I'm sure. And I think that might be a more effective way of selling this intangible product that people generally don't want to buy. People don't want to buy insurance at all. So they don't want to buy. And in the case of flood insurance, they don't really believe they're at risk, even though the data is there to show that they are. So I can see all those things happening, Rob, in the near future for flood insurance.
Yeah, and you're talking to a guy who also has a HoloLens and Oculus Rift, and so Quest. So I'm certainly very keen on visualizations, and certainly enjoy that. And they do have a big impact on decision making when you can see it rather than just look at a data point. It makes a big difference. Rob,
and one final thought is. You're right, Jim. Previously I would have to talk to homeowners about, their property insurance coverage and about the need for flood insurance. And, that visualization would be of kind of, hey, imagine what the scenario would look like. Imagine dealing with the claims adjuster. Imagine what this would look like. But I'm trying to paint that picture in words. So I agree with you. I've always thought that, a VR, AR scenario would be good. And the other thing I always said is if you don't have insurance, you better hope that your flooding is widespread. You mentioned Hurricane Harvey. And the reason I say that is so that the government will cut you that kind of FEMA relief check, because if it just happens to your house, but no one else's house, and you don't have insurance, then, you're just totally out of luck.
Yeah. The average FEMA relief check in Harvey was $4,000, and the average loss was $116,000. That's a really risky path to wait for the government to bail you out, because that is absolutely not the intent of FEMA checks. FEMA's goal is to get people back on their feet, not get them back 100% to the picture of their house before the flood hit.
Yeah, exactly. Take care of yourself. Always. Take care of yourself. Don't depend on the government.
Yeah.
It's,
Yeah.
As you will be sorely disappointed, and it will take far, far too long. Not what they're there for in that case. Well, Jim, this has been a great discussion. I really appreciate it. I enjoyed the conversation around what's going on over there at Neptune. Again, the website, if people want to find out more information about Neptune, is neptuneflood.com. We've been speaking with Jim Albert, who is their co-founder and chairman. And Jim, thanks for this. If you just sit with us for just a second, we have a couple of news stories we wanted to cover for our listeners really quick. First, in Japan, they shattered the internet speed record, and this is amazing levels of data, 319 terabits per second. That would allow you, it's roughly 40 terabytes a second, which is basically 40 high-def 4K movies a second being transmitted. That means you could transmit the entire Netflix library in a quantifiable amount of time. And that was over a 3,000 kilometer distance. This was not a short run in a lab. This was over fiber optic using a technique called multiplexing that actually splits the data transmission in different wavelengths. And what they're doing is they're adding more and more and more finite wavelengths so they can transmit at all these wavelengths. Really not a reduction in latency, which is the amount of time it takes for a packet of data to get from point A to point B. It's just the amount of the size of the pipe. So it's about volume, not velocity, right? Light still travels at the same speed for now. The light still travels at the same speed, but the amount of volume, and for our 18-year AT&T guy here, this has got to be a little exciting, because Bell Labs and the baby bells that split up, and AT&T, it has the underlying IP under so much of the telecommunication stuff that is going on today. But this is a crazy exciting. We're talking about approaching an exabit per second data transfer speed in the next 10 years.
Wow.
Which is just mind-boggling to see what we can do with that. Jim, it's got to geek the old AT&T guy in you out a little bit.
James, I was the transmission engineer for the very first fiber optic cable to go in the U.S.
What?
Wow.
And I don't even remember, but it was like 45 megabits per second or something like that. So just that'll take you back.
Wow. And to see what's going on now with fiber and with multiplexing in general was a groundbreaking revolution, because they could transmit all the different colors of light. And this is huge. It's going to allow for an incredible increase in R&D capacity, shipping massive volumes of data around the world. It's also scary, because there's a lot of bad things that can be done with a data connection speed so fast you could dump someone's entire server array in a matter of a few seconds. But so secure yourself as well. But this is good news for those of us who like things very quickly. Next, before I hand over to Rob, in Insurtech news, Swiss Re appointed Scalzi to lead automated underwriting strategy in Asia. And this is a staffing announcement, and I usually don't report on staffing announcements, but Barbara Scalzi is stepping up to lead the automated underwriting solution Magnum in Asia for Swiss Re. And the reason I point this out is that automated underwriting, and we've just been talking about it for the last 45 minutes, is a really big deal in the Insurtech startup world. But to see Swiss Re really putting together a business unit and a business chief, and they actually pulled Barbara Scalzi from an Insurtech company. And so they're starting to poach some Insurtech companies and bring that talent in-house, build their own product lines, and automate underwriting. So they're not left behind on this revolution. And so while this is a staffing announcement, it is from a very, very large carrier, very, very large company, Swiss Re, that we're all familiar with. And I think as a harbinger of some more poaching you're going to see the large companies do. So she spent 3 years at the platform Underwrite Me. She was their director of biz ops and customer success. And so I think you're going to see more and more carriers poaching talent off of Insurtechs, bringing them in-house rather than doing some acquisitions. So you'll see some acquisition activity, but a lot of poaching activity as well. So I thought that was just an interesting, notable staffing announcement that made its percolated its way onto the interwebs, Rob.
Yeah, no, you're right. I think following the talent the next 5 to 10 years is going to be fascinating, and you're already seeing flows from traditional carriers into Insurtechs. I think you'll start seeing that backflow, and we may not even talk about traditional carriers versus Insurtechs anymore. At some point, it's going to kind of all blend. It's all going to be at the size of the company, but we may not be making that distinction in a few years. So I've got a couple of flood-related news items this week from the Insurance Journal in honor of Jim joining us here. The first is actually affecting some of my in-laws. So my wife is German, and Germany has had really, really catastrophic flooding from just a ton of unexpected rainfall, 1 in 100 year type things. Insurers are expecting costly claims for 2021. So for those of you that are not aware, it's been kind of crazy weather over in Europe and Germany in particular. So this issue of flood is certainly not restricted to us here in the U.S. And speaking of the U.S., NOAA, the National Oceanic and Atmospheric Administration, has come out and said that sunny day floods, quote unquote sunny day floods, will increasingly inundate U.S. coast at sea level rise, meaning you won't necessarily need a hurricane type of event or tropical storm or these 1 in 100 year rains that they're experiencing in Germany to cause floods, that you're going to have more common occurrences. I used to have one of my favorite images from slide deck was from Norfolk, Virginia, the Hampton Roads area, which is kind of notoriously low and under sea level at some points, where it was a sign that said no parking on the street except when flooded. It's like, I don't think that's the time that you should be parking your car, just because it won't get towed away when it's under flood waters. But there's certainly areas of the country, Galveston's another one, the New Orleans area and others that are actually sinking as the sea level is rising. So this is becoming more and more. And of course, Miami, you already referred to, Jim, as seeing a lot of this kind of regular flooding, where it's a common event that's people are having to deal with on a regular basis now.
Mm-hmm.
Absolutely. And of course, we don't want to, we would probably be remiss if we didn't talk about the residential tower collapse just north of Miami Beach. That is such a big event for insurance companies, because now they're going to have to, rethink their inspection and ongoing insurance of these large condos, and especially in South Florida, where there's a lot of salt there, a lot of humidity, a lot of flooding, a lot of water penetration into basements, and what appears to be some substantial degradation of the quality of the structural supports on a lot of these condo projects. So it's going to certainly impact insurers in Florida. Rob, what else you got?
Absolutely. You're right. Just kind of building on that obviously tragic situation. And I'm sure a lot of other folks, very worried about their structure. The warning signs were certainly there, but I'm sure there's other facilities we're not hearing about. And so, I think both the quality of our infrastructure as well as some of these climate events or climate related events are going to, precipitate the need for even more insurance products in the future. And I think Jim, Neptune Flood is well positioned to take advantage of that in the future. So it's been great having you on.
Thank you, guys. I really appreciate it. I just like having someone interested in talking about flood insurance with me. So this is really good.
We'll geek out on all kinds of insurance, but flood insurance is a very, very relevant, timely, and topical issue. So we're happy to geek out, and I'll definitely see you next time I'm over in St. Pete. And keep on trucking with your business. And congratulations on the success and the growth that you guys have experienced. And looking forward to staying in touch with you guys.
Thank you, James. Yep. And appreciate it, Rob. Thanks so much.
And again, for everybody out there in listener land, I hope you have enjoyed our discussion here. If you want to find out more information or subscribe to our email newsletter, remember that you can text GEEK OUT. That's GEEKOUT to 66866. This has been the Insurtech Geek Podcast, powered by JB Knowledge. That's jbknowledge.com. It's all about technology that's transforming and disrupting the insurance world. I've been your host, James Benham. That's jamesbenham.com, with co-host Rob Galbraith. That's endofinsurance.com, with our guest, Jim Albert. Thanks to Jim Greenlee, our podcast producer, and Kara Dalton, our creative producer. And thank you for joining us today. We're taking you on a journey through insurance tech. So enjoy the ride and geek out. See you next week.